No, it's just slow. It's picked up activity now, but nothing.
Yeah, pretty calm. Awesome. Well, we are live. Good morning, everybody. Pretty casual morning here. We're hanging out with Joe and Tim. We're going to have a great show here for you. This is the MMT Live Investment Show, where every week we go over new topics about the current market, things going on within the market, and try to give a fresh perspective on some of those things. I think it'll be very clear today that we don't care about a lot of the same things in the same way. They benefit us directly when we're talking about some of the things that happen in the market, but we're really able to kind of do our process, period. And a bunch of things happen, but our process is not based on the things happening. We just have our process, and anything that kind of adds to that volatility, we have a good time with. So we're also going to be talking about some of the things that happen within the market, some of the decisions that affect the market. We're going to be talking about the Federal Reserve, FOMC decisions, a couple nods to the Federal Reserve effects on the USD and why the USD obviously affects the market. There's mentions of ADP, things like that. Job indexes, producer price index, GDP. So if you want to see what I'm seeing, go ahead and go to our website, www.micromoment.com. We'll put that up on the bottom here. And we put out a cow report every Friday for the last 20, how many years, Joe?
It's over 20, maybe 21 or 22. Yeah,
21, 22. Yeah, so almost when I was born, he started putting these out. A couple years later, I think he just felt that I came into the world and
almost named it the Micah Report.
Micah Report.
Yeah,
see, and I think it rolls off the tongue a lot better. That's all I'm saying.
Yeah.
Excellent. Randy is at his baseball game.
It's baseball game. And, unless it rains. Now, if Tim said it might rain, if it rains, he'll probably be able to get back before we finish here. Be honest.
Awesome. So he might stop in. He wrote our editorial. So each week on that cow report, on the Micro Report, we have an editorial, which is written by someone different every week, and it's just an opinion-based thing focused on one aspect of the market that we like to talk about on the next week's podcast. So Randy wrote that last one. He has a much-awaited baseball game that he's playing in right now, but we will do our best to do him justice. I would like to invite anybody that would like to comment on Facebook or YouTube. If you have any sort of agreement or even disagreement, just throw it in there and we can see that comment pop up. And if you have any questions about trading, what we do, general advice on certain platform things or things like that. We're not financial advisors, but we do coach a lot of things based on the market and how to better interact with it. So
nice.
Yeah, going today, we have Tim and Joe who are on the same morning webinar every morning. Mm-hmm. They open up the market and trade the first hour in those short-term options. Tim, if you'd like to explain generally what you do, and then how you guys are doing this week. How's
Absolutely. It going? Just made a trade 60 to 68 on Apple put.
Nice.
And it's still going. Holy smokes.
Is it? Wow. Yeah, I was wondering if this would refresh or if it would turn back up. Hugging downwards.
Yeah, it's heading down. Anyway, I'm sorry. I'm Tim. I'm one of the instructors or coaches and desk traders for Micro Moment Trading. We trade every morning for the first hour of the market, and what we do here are very short-term micro moment trades. We trade on volume. We trade on volatility. We look for breaks breakouts in the tick. Most of our trades are anywhere from 10 seconds to a minute in length. They tend to get shorter and shorter as we go in and take profit quickly. We never stay in overnight. And we are in cash or back to cash 98% of the time. So we're in and out very quickly. We just look for sudden moves in the tick, and our ICE charts allow us to, it gives us a bit of a preview. We have a number of indicators on our charts that show bias in the price movement, and we simply trade on that information. We have been doing 100 plus each week, well, for quite a while now, 3-4 months. Now we've been above 100, and we've reached 200. I think our best day has been 230 return. So yeah, we've been doing well. And this is a summertime market too. We've made the transition from winter, spring into summer, which is generally slower. Our volatility slows down. All that to say that trades are not as numerous as they are during the winter months when traders are all in full time. So we're pretty proud, and it just goes to show that our technique works, our charts work consistently. We prove it over and over again by our numbers. And what I do along with Mark and Cezanne is I trade Apple, Mark trades the Qs, and Cezanne trades Apple, but she's figuring out SPY as well. So we have a full slate of instructors.
Sorry, what was the last name you just said?
Cezanne.
Okay, so is she trading with you guys, or I heard her on an archive, but I was wondering. Yeah,
she came in. She's my daughter, and she's been doing this about 8 or 9 years. And she came in really to replace either Tim has to be off today or Mark has to be off a day like today. But she's been coming in every day and doing the trades and stuff. But she just started. She started last week and just was helping Tim and commenting on some editorial type stuff, technical stuff. Then she started trading this week. Yeah. So.
Nice. Okay. Yeah, I was wondering if I could use her audio in TikToks. Is actually what I was.
Oh, absolutely. Yeah. Absolutely.
Yeah. She's comfortable with that. Okay. Great. Yeah. Great. Knowledgeable. I will say knowledgeable as all hell. She's. Yeah. I learned from her. My brother was trading when I was 15, and my brother was trading options, and he brought me into his office, and I walked in that room and I looked at these two side-by-side screens, and it was back when Trade Monster was a thing.
Yeah.
And every time any number, the bid, ask, delta, volume, anything would change, it would light up either red or green. The entire board was just, and he didn't know what he was doing. So he probably had 40 strikes visible on each side. Like, it was full of numbers, and it was just this Christmas tree of just fireworks. And I was like, I have no idea what any of this means, but I know that I will know what every single number, one of those numbers means. I know that I'm going to know that. I like that. And literally that's why I'm here. And then the next morning I went over to he set me up a paper trading account, which, if anyone doesn't know, it's virtual money, but it works in the real market. So if I was to buy SPY right now, I would have to pay $425.17, but it would just be on a digital money. However, everything besides that, like, there's no way to fudge those numbers. Like, the P&L you have is solid. And so I started learning on the virtual platforms then, and Cezanne taught me basically all of my foundation. So to see her back on there is I mean, if anyone and anyone, I know there are micro moment people on here, I want you to know that you're learning from the coach teacher. Like some foundational people of this company. I don't know, there's probably even some higher ups that learned from Cezanne and Joni, eh?
Oh, probably so. Yeah.
Even like Randy and Keith. I know Keith learned from them, and so it's pretty cool. It's pretty cool.
Yeah, it is. It is such a treat to have her on and have her perspective as she deep dives into some technical analysis. It's just great. She has added so much to the call already. I'm just mad at Joe for hiding her for all these years.
She was keeping
her in her room all these years, Joe.
Well, don't forget, I wasn't hiding her. I fired her. Remember that?
Yeah.
That seems like the main mistake.
Daughters get to an age and they start telling their dad what to do. And she kind of got to that age, so I had to fire her.
Well, listen, if you haven't been fired at least once by Joe in this company, then you're not really truly in the family.
I'm at like 4 or 5.
Let me add something that contributed to what Tim started off with. We actually have 111 weeks in that micro moment service that we do every morning from 8:30 to 9:30 Central Time. Now that's subscriptions. We've been doing it over 5 years, and what these guys do, they use our corporate account and then their own accounts to make these trades. And Tim, we only had one trade today. We're having an incredible week. We had one trade today at 11.5044 prior to coming on here, and he's done another one since then, which I'll add into tomorrow's another 13. So he's at 24.8374% for just today. And don't forget, mutual funds, if they're lucky to make 5% a year, these are real trades and real money. And so we're up so far Monday, Tuesday, Wednesday, Thursday, 129.0092%. Huge. And we've averaged all those 110 weeks, we've averaged over 100% for every one of those 110 weeks on average. And so they're just doing an incredible good job. Cezanne's been around. I guess maybe she's going on 10 years. This thing, I don't know. So
I was learning from her, 8 years ago. So
8 years, yeah.
However old trade moment.
You've met her. She's met you because of the cruise.
Yeah, we hung out. Her and her husband, and then Joni's husband as well. And her. Yeah. Great.
That was a cruise.
Marion says, "Don't make Tim talk right now." Looks like you were doing a trade or something.
Have you done another one?
No. I was in a trade when Micah was opening up. I just jumped into trade, and I think someone asked me what it was. It was a 134. The strike was 134 put.
Yeah.
On the 1 day out, or no? Sorry, I'm looking at SPYs. You're on Apple.
On Apple, yeah, it's 1 day out.
Yes, Thursday.
Expiration is tomorrow for Apple.
I've been pretty exclusively on SPY, so I'm used to just the 1 days and 2 days.
Yeah. No, we're still on one of the last ones that are still a weekly expiration.
Yep, absolutely. Awesome. Well, let's dive in here.
Let's do it.
Let me say something about that editorial.
Yes, please do.
It is a long editorial. I mean, that's the longest editorial. Now, I think that's why he probably didn't really have a baseball game. It's just self-defense to use that as an excuse. He didn't want to have to go through that editorial so long. But for our folks out there, Randy's a big baseball player, and he's in the league. He has to go around the country. So
yeah.
But
we have a pretty open format, though, so it's nice for us to talk about whatever parts of it we want to.
Well, let me say this about that editorial. There's lots of really good stuff, and from our macro moment standpoint, now maybe Randy uses something in his traditional covered calls because he does things like he buys on down days. He only creates a new position on down days and things like that. And so that a lot of that data, he would look at some of that data to determine if it's going to be a down day or not before the market opens. So that stuff is valuable stuff. From our standpoint of macro moment, we don't look at the market being down or up. We don't care if it opens up or down because we're not trading anticipated value increases in stocks or decreases in stocks. We're just trading volume. Whichever way volume goes, that's how we're going to go. Now, having said that, all of that stuff that's in that editorial contributes to that volume being up or down. So the market out there is evaluating all that stuff. We don't personally do it. Maybe Randy does. But the market is evaluating all that stuff, and that's what's caused the market to go up or down. And that's what's caused the market to have various degrees of volume, which is what we're trading. So all that stuff's important. It's just that we don't need to read it or study it because there's nothing we do about it. In other words, we're not going to not go in and not do a trade because, let's say, it's happened. We're going to not go in and do something because, one of those things might affect that one way or the other. We're just trading the volume of that market.
Yeah, they don't matter in terms of direction, but they do matter in terms that they move the market, and that's right. The main thing we care about. Yeah,
that's right. Yeah. So
absolutely.
Our macro trading is only where Randy has lots. He has a book that weighs about 3 pounds of covered calls and leaps. And he has so many people that follow him, and he just makes such good returns. If he was on here right now, I always ask him what his returns are. He's making pretty much what Tim and Mark are doing. But
the last couple of weeks, he's closed between like 11 and 15 trades a week. Usually between like 5 and 11% profit per trade.
Exactly. Yeah.
That's like the last 3 weeks about what he's averaging.
And that's probably we do more than that, but we're not making today that 11.5% and 13.5 are big returns on those alpha trades. We do sometimes 13, 14 trades a day, but a lot of times they're 2%, 3%, something like that.
Uh-huh.
So he has fewer trades, but he has bigger profits on them. Uh-huh. And our technique, our micro moment, is just so simple. I mean, unless you're colorblind. You can be anything but not colorblind, because when you do that, our chart pops up and you enter the trade based on the chart, and that's what Tim and Mark teach you and say doesn't teach you how to do that. The chart tells you when to get in and when to get out. But when you get in, there's a little green light on there, and that light's green. So if you can see green, then you're good. But if it turns red, you're supposed to get out just like that. You don't even think about it. You don't worry about it. You don't not get out because you say, oh, it's going to come back up. It's going to come back up. No, it's not. Probably. You want to get out, it takes a penny or two lost. And but it just dawned on me, that's a misstatement. It's not. You can be colorblind because the red is on the left and the one on the right is black, is green. I mean, the green is on the left, the red's on the right. And so
I will actually say we have done Dirk Van and I have done some thought onto possible solutions for that because we've actually been made aware about that a couple times. 2 different people were asking if there was a colorblind option. So and most of the time colorblindness affects certain colors. It's more common. It's not like it's full color of black and white. There's just one color.
Yeah.
And then obviously colors are all blended together, so it modifies other colors. So you don't even have to really do much with like patterns of the lines and things like that. You just have to change the color of each one, and then it will appear to them.
What I said about help you out then, because again in that chart, the green is on the left and the red is on the right. So if you see something glowing from the left, you know it's green, even though it may look purple to you or whatever.
Everything glows on a screen though.
Everything
glows on a screen though. So I'm not sure.
I know. Not necessarily.
Anyways, we'll figure that out.
We'll figure it out. Yeah.
The general topic for this is I'll just read the first sentence here. There are many factors that impact the stock market: political events, international trading restrictions and sanctions, acts of war, and economic reports and forecasts. Mainly, I would say that one. Today, I'm going to discuss some of the major reports that are produced during the month that have an impact on traders' sentiment and outlook. There are hundreds of reports that are communicated during the course of a month. I will list some of them and discuss potential impacts to the market. There are not these are not all of the reports that are released every month. So basically, there's a lot of noise, and he wanted to break down the ones that would affect you regardless. And I would say that these things, affect. If you do anything other than micro moment, there's a lot of long-term impact these things have. There's a general concept that I'm going to need help explaining, Tim.
Yeah.
And that is the timing of effects of reports in price. So what I mean by that is it's not so much the case where Apple says, hey, we're doing this, and then a price change happens, and then you're good. Right? There is a leading up to that point, because they know everyone knows the decision is going to be made. There's speculation up to that point of which direction it will go or how the earnings are going to play out, right? Let's just use earnings report. The period for the earnings report is different because there's one coming.
Right.
When it happens, there is something that happens, right?
Right.
But it's not all at once, and then afterwards it's digested.
Right.
So there's kind of the rumor, the decision, and then the digest, and volume happens throughout. But how do you kind of mentally visualize that, Tim? It's not just there's an announcement and then a price move and then you're done.
Sure. And this is really important to know. And this is particular to earnings reports, right? We know that earnings reports come out at a given day of the year or the season. Tend to be real close to each other, and what tends to happen is there is rumors on the street, right? The analysts are starting to talk out there and start to put out some indications whether they think the price has beat the expectation or it hasn't. So we have that period, that run up. This happens about a week before earnings are actually reported. So those rumors get baked into the price. So if the street thinks it's going to beat expectations, that optimism will tend to push up price right during that period.
Before anyone knows what actually even happens.
Before anyone knows. And this is so true of stocks all the way across the board, is that we tend to trade on the rumor. So our initial buildup, that price, that news gets baked into the price that week, that first week. And then we have the earnings that actually come out. And if they're nice to traders, they'll have them come out during the first 5 minutes of the market, so we can take advantage of it instead of aftermarket. And whether it's beat the market or not, that can give the price an initial little push up or push down. And then there's the digestion phase for another week where it's well, what does that really mean overall? Where analysts and everyone can actually have a chance to see how that actually affects that business or that perspective. Then we tend to have a cooling off period. And after 2 to 3 weeks from rumor to report to digestion, it will end up very near where it was to start with. So
that's a good point.
We don't trade too much, at least with micro moment, we don't trade too much on earnings because they tend to get baked in the week before. We don't change our strategy, right? We still wait for an increase in volatility, an increase in volume, look for opportunities to get in on volume and make a short trade. And you're going to get it in a second, so I won't go into it too deeply, but the FOMC reports that come out, the quarterly.
We can actually transition into that. Go ahead.
Yeah. So one of the next reports we're going to talk about is the Fed's quarterly reports. We just had a huge one that happened. The FOMC was considering raising interest rates based on or helping to slow down inflation. And this one was particularly important. They'd been kicking the can down the road for several sessions, and they finally made a stand. And that had a huge impact on the market. And it happened that they always have their meetings Monday and Tuesday. On Wednesday at 2 p.m. Eastern, they get up and they do their press release live. And typically in the first 10 seconds of that report, the market goes crazy, one way or the other. In this case, it dropped about $2 in about 30 seconds. Unfortunately, it happened so fast it couldn't be caught. None of us were really able to execute a trade. If, we don't do this because, if you wanted to, you could have put in a trade before going on the rumor, but that's not our strategy. We don't trade on rumor. We don't have to trade on rumor. We have plenty of opportunities every day. The market serves us up trades the way we want them every day. So we don't have to speculate. It's speculation, right? It's guessing, basically.
You know what I think is funny here is Tim's doing a fantastic job explaining what these initials mean and what they do and how they affect the market. In reality, he never uses that stuff. Neither do I. He just does good because you're doing micro movement. It's the only technique on the face of the earth where it doesn't make any difference what's causing whatever to happen. We're just trading it when it goes up and going down, and when the chart tells us to. And we never think that's the beauty of it. What he's saying is exactly right, because that is what makes that market go up and down. The stuff he's talking about is what makes it go up and down. So as long as you know the market's going up and down, not because the squirrel would run over on Main Street or something like that, it's going up and down because these various indexes, the way people interpret them, that's why they go up. Because when you do trade macro movement, you take advantage of those ups and downs, and you know those ups and downs are going on because of all these reasons. You don't particularly care which one it is because that's not, and that's
Yeah, and I think that's the stability, or that points to the stability of our strategy. Is it doesn't change how we trade, right? We really don't care less what's going on out there. All we care about is that the market moves one way or the other, whether it's going up or going down. We make money both ways, of course. We just see it as an opportunity for, our ETF or our stock to move, and we just take advantage of it. So we don't change our trading style.
That was on the 18th, right?
I'm sorry?
That was around the 18th?
Yep.
Yeah, it was. Yeah. Okay, cool. I have a little chart. I actually did make a trade on that.
Cool.
I haven't been on the webinars. I did not make a trade during it. I waited till after because I ended up pulling about 47% on that.
Nice.
47%. Wow.
Yeah, it was intentional. So basically, I was trying to find a decent chart on Yahoo Finance, but you do not have decent charts.
Tim, what's strange, Tim? We're talking the huge return you just made, and big returns Tim makes every day, what the micro makes every day. The vast majority of people think we're crazy. They don't. How can we be ahead 100 and whatever it was % through Thursday? That's for just a few days. If you made 100% for a week, and by the way, I got to put a plug for it because this Micah has all this stuff on the website. Plug for our master's class coming up the 24th and 25th of July. And you can sign up off our website, www.micromomenttrading.com, and sign up for that. And but we have Tim's going to be there, Randy's going to be there, and Mark's going to be there. And Keith is the only person I've ever known, and I think Micah probably would agree with me on this, that in his the technique he used to teach for us, and a couple of years ago, and then the market kind of went south, but he made just a couple % short of 1,000% on the what was the technique? Credit spread technique.
Right.
And we need nobody to believe, so brought brokerage statements, and they were right there at the master's meeting. Almost 1,000%. Who in the world ever made 1,000%? I guess maybe some fluky deal where some stock goes incredible, but 1,000%, and that's he's going to be teaching at the Masters. So I just want to put a plug in for the Masters, and you can sign up on our website. So.
Yeah, Masters is going to be incredible, and it's the first time we've all been in person since COVID. Yeah.
And we're flying everybody in except Micah's coming by bus and Kim's coming by bus.
Yeah.
You need to leave in a couple of days if you're coming by bus, Micah.
Yep.
I know. I
wonder how long it would take you to get from Seattle to Fort Worth.
The bus, a long time.
Woo, I don't want to find out.
That'd be a tough journey.
A trek for sure. Yep. Sorry, what'd you say right before the bus? I had a comment on that.
Oh, me?
Yeah. I don't know. Anyways, moving on. Yes, Masters is going to be very cool for sure.
Yep.
Absolutely.
Yeah. We're looking forward to that.
Yeah. So going back to this rate decision, the general way I played it personally was the big drop. It actually hit the floor, bounced up, jagged a couple times, and then by that time, the Bollinger Bands had come back in. The chart had kind of because when it goes, everything's out the window. There are no indicators because everything's vertical. You know which way it's going, right? So all indicators are like, yeah, well, they're all maxed out, right?
Right.
I remember
that's what we call chasing when everything's vertical and you're just well, it's going this way right now, so I must just hop into it. And that's what we've seen way too much of over the past 3 months, especially with crypto. And we see people getting hammered by it again, because what goes up must come down. It's true. And what goes down usually comes back up. So after that bounce around a little bit, our chart comes back together. Our indicators reestablish themselves. It gets some sense of average back. And then you just have a crap ton of volume with these charts that nobody else has that are built for short-term momentum. That's what our charts show, is the shortest term momentum possible. So boom, 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 bounced around a little bit and then kind of crested, and then I got the put for the drop after, and just held it for like 15 minutes. I made 40. It was either, I don't know which one it was, but it was either 42 or 47%.
Wow.
Yeah.
And when you said that, that's when you said that, that's when I went into the thing about the money that market made. And then I didn't finish my thought, because when people subscribe to that micro-moment trading, it's on there every morning, people send into us what they're making at that moment. And so that folks, because I remember I said nobody would believe these returns, but the people are sending in. The people are seeing these returns that our clients are making, that are attending that seminar, and many times they do a lot better than Tim, and Mark, so it's fantastic.
Yeah, that was very smart. I know several people who were in contact with me who got in on that initial drop, but got in late when it was dying, and it had that bounce back up. They got scared, dropped out, and tried to get in on the next one. But anyway, they lost. Played it as they chased it, just as you were describing. But yeah, I did notice after going back and taking a look at that after that initial rush where it bounced down, it took another ride down. And yeah, that was definitely the time to get in on that once everything kind of settled, the dust settled, but there was still high volume happening on that. And the bias was toward the put side. Yeah, that was absolutely the time to get in on that. So great trade.
Thank you. I appreciate that. Yeah. And I mean, yeah, those bigger term chart things mixed in with some support and resistance is, I mean, that's what we teach anyway. Yeah, I would like to go through and define some more of these things. If there's any new traders on here that would like to know some of these acronyms. I feel like there's a certain amount of over complexity in the market just to confuse you. The example I always use is, why does it have to be called a high market capitalization company? High market capitalization. It just means it's really big. That's it. It's a certain amount of billions of dollars.
Yeah.
It's really huge. High market capitalization stock. It's to make it sound fancy. Like
Yeah.
all these acronyms, all these FOMC, like there's this consensus about the stock market that it's too complicated to like know, and I want you to know that's intentional. So when we bring these things to you, at the end of the day, you don't like just trade however you're going to trade, right? Never come to Micro Moment if you don't want to. Trade how you're going to trade, but know that it's not as complicated as it's made to seem, right? All of this hubbub, all this noise, all of the news reports you see, GME, AMC, Bitcoin, you're getting yelled at all day. You're just trying to figure out, is it going up or is it going down?
Right.
That's not. Is it going up or is it going down?
Don't forget Kramer. He always yells.
Yep. Yeah, Kramer. Exactly. It's because it's meant to be exciting, emotional, and rah. It's really simple. Things go up and then they go down, and then guess what? When they go down, eventually they're gonna go up, and if they're going up, eventually they're gonna go down.
Yep.
That's it. It's going to go down and then up and then down and then up in that order over and over until
That's what you learn when you take Randy's course there, and you learn using our charts how you only enter a position by the stock when it's making a V. A V is at the bottom of the chart, but a V looks like that. But when you look at the chart, as the chart goes up, the highs get higher and the V's get higher. So you want to enter at the high, it's going to come down, you're going to get discouraged. You want to enter in the space of V because that V is going to keep getting higher, it's going to keep going up. And just learning something simple like that is huge, because most people never look at the chart. They go out, they buy the stock because of some of all this other data they're hearing about, or their next door neighbor or somebody. And if they enter V, so.
Yeah, absolutely.
Yep.
Yeah.
Absolutely. Well, let's define some of these terms.
You've been trying to do that now for several minutes.
Yeah. I starting off with the USD stands for US dollar. I'm kidding.
Thank you. I've been wanting to.
Let's talk about that. Yeah.
Yes. Let's see. Jobless claims. That is another very relevant one right now because of the job market and all those things happening. There's a lot of contradictory things just within that. Or is there even a labor shortage, or are people just sick of it, right? But the numbers, Tim, I'll need some help on this one again. It's also, it's kind of, it's about how they frame it, right? I feel like most people that respond in the market to the numbers that come out don't truly know what those numbers represent.
Mm-hmm.
If there's a certain amount of jobless claims, the true core understanding for macroeconomics to know how $100,000 jobless claim difference is going to really affect the market, and to know what we're going to do with that.
Yeah, Mike, in that editorial, look down there. What you're talking about, it's really confusing because I never even saw the term down there. A jobless is J-O and some other initials, and it stands for something I never heard of in my life.
Oh, JOLTS.
Huh?
JOLTS. JOLTS.
Yeah, I'd never heard that in my life. What does that mean?
It's jobs from the Bureau of Labor Statistics.
Yeah.
Which measures job vacancies.
Sort of what Mike has talked about here is how they have these these symbols, So
yeah, and this is just, all these reports are just macroeconomic indicators that give us the health of the economy, basically, from one standpoint. So when we look at jobless claims, which is what that's reporting, it's misleading, as you're saying, Micah, because it's simply reporting the number of new jobless claims. All right. What this doesn't consider is how many people have retired, how many people are have stopped looking for jobs, how many people are in job transitions. It's just simply a moment in time, right? How many jobless claims were made last week?
Yeah, it stands for job openings and labor turnover.
There you go.
Yeah, Tim, you actually made a mistake there. You said
I did.
No, you said the macro. No. In economics, the macro is all. No, the macro is all of them combined. A whole bunch of them. When you break them out individually, they're macro.
Okay, I'm sorry.
Okay, don't
micro.
Yeah,
I am clearly not an economist.
There you go. Yeah.
But still somehow a successful trader. That's interesting.
See, that's a great indicator right there. You know, if you don't think you can do this, trade with me.
There you go.
Wow, there goes Spy. Are you in that one, Micah?
Yeah, no, not currently.
Yeah.
Got up a 425. I didn't know if it would kick back up to the all-time highs. So
yeah. So Joe usually mentions this on every call. You're going to see our eyes dart back and forth from one monitor to the other as we're kind of keeping one eye on the charts, on our ICE charts, our proprietary charts, which you too can have at a very reasonable rate. If you're trading, they're a must-have, absolute must-have. But you know, we look for trading opportunities while we're on this call, and we often make trades while we're on this call.
Tim, if you had that new big Dell trading screen, Dell Computers makes this big what do you call it?
Big wide screen.
Yeah. What do you call that you're looking at? What do you call it? Not a screen, but a
monitor.
Monitor, yeah. They make that big monitor that's just for traders. So you have all your stuff on one. So if you put your head, it would save you a lot in neck thing.
Yeah.
But you would just be looking at, you would just be going like this all the time, like that.
Yep. Dell and I think a few others make a monitor that it's about 16 inches high by 40 inches wide. It's about the equivalent of 3 screens side by side, and it has a nice little curve in it. So you can pick them up anywhere from $400 to $800. Great invention. Don't have one yet. Gamers, I think, are the ones who created this monitor. So I imagine Micah has it.
all of Micah's screens are on the ceiling because he's always had to look up like that when he's looking at them. So.
Yeah, Micah's got a pretty powerful gaming system.
Yeah,
I do. I will say gaming PCs, and I got it for cheap too in comparison to what gaming PCs go for. But if you know anything about computers, you can build yourself a thing that prioritizes. I mean, it's a lot of the same things. You have to streamline your incoming, right, to give you the least lag possible. If there are, I'm just going to be honest. I'm a gamer, and if there are any gamers out there, you know that in those reaction time type situations, it matters a lot, right? Also, if somebody is running across your screen, right, and you're trying to shoot at them, they're running across your screen. They're going to be in a different spot in a quarter of a second.
Yeah.
Now, when you're talking about the reticle and a bullet, right, that's one projectile. A little change, right? They're also far away from you. So if you're a quarter second behind is forever in lag, right? So if you learn, there's all sorts of resources on how to reduce lag in gaming, some things like that. There's not as much for traders. There are, but they're a lot more technical and they bring a lot more in to it. And if you're a new trader, it's a little bit complicated. So if you're getting set up and you're looking for even a used gaming PC is going to be really good for you. You have to learn a little bit about components, but they're actually that's something that's a lot simpler than it seems. But yeah, the guy running across your screen, a quarter second delay is significant. So if you apply that to trading, and you're talking about fills, if you're in high volatility situations, then if you put a limit order in on the 424 at 424 call on SPY right now, it's at 144. It's at $1.44. If I put my limit in at $1.44, it would probably fill on the ask, right? But if I put my limit in at $1.43, it will not fill. Limits are hard and fast rules. So if you're behind on those things, you won't get into the trade. And especially if it's fast moving, sometimes the option doesn't update, right with the moves of the market. It has to kind of catch up with that. So, it's very real. And especially if you're talking in trading terms, even if you spend a few $100 on a nicer laptop or computer, once you get into trading, you realize, down the road, that's a single trade difference. I mean, for all of our coaches, that's probably that one trade can make up the difference that the computer would even cost, right? Mm-hmm. And the outcomes of a week of trading, right? It's about that long-term consistency. So if you can get, just because of your computer, if you get an extra cent or two out of each trade, that is going to exponentially affect your trading, right?
Well, on our micro moment stuff, we're only going for a cent or two, 2 through 5 cents is a big thing. So because we're trading the options, so we don't have like Randy and an Apple. The options he traded might be, sometimes he goes 45, 47, 50 cents when the market first opens, depending on the day, and then but usually never more than $1 or $1.50. So that nickel or 7 cents, or even like one gentleman at 27 cents, huge. Those are huge profits.
Yeah.
So
yeah, absolutely.
Yeah.
Yeah, absolutely. Makes a huge difference.
Save a little bit.
Yeah.
That's right.
Michael, we ought to run a contest where people watch Tim, and we say, okay, now who's going to, see him make a trade? And the first one comes up and says, he just executed a trade. Have a little
try to spot in the chart setup. That'd actually be really fun.
Yeah.
That's actually a good concept.
That would be good.
Yeah.
Where did they place the trade?
Yeah. You got a little breakout going to the top side here, but I'm not going to get suckered in.
And I feel real bad about this. See the friend note on there?
Yeah.
I talked with you for a brief moment last week. You were off for lunch. When is the ideal time to call? If you will just text me. You got my number there. I gave you my number. Text me, and I will return today because I'll go to lunch when we finish here. It'll be 11:15 or something, and I will text you when I get back. So, thank you.
There you go. So let's see what else we have in the report. He talks about CPI, Core Consumer Price Index, measures the change in the price of goods and services, including food and energy. It's very close attention. Yeah, this. Randy's really done a comprehensive job on this, and it. And again, it just reminds me of how much stuff we kind of ignore in our trading style. When we see the tick moving up in a straight line,
I think there's even more improvement to be made on the micro moment side of that, probably, because I think these do learning. I think we have more room to learn from Randy. Even I know.
Absolutely, yeah.
To know the long term, know more about the long term trend would give you a lot more confidence within the micro moment, and it would establish that long term direction. So even if it's going up or down, you're able to prioritize calls a lot more safely with a lot more bias, or puts, for instance, and that would probably lead to more opportunities. I'm excited to see Randy in.
Me too. And if you're coming to the Masters, and I hope you all are, please make a point of introducing yourself to Randy. He has an encyclopedic knowledge of his side of the house with covered call and
He
his
makes us
techniques.
feel like children.
Yeah.
Let me tell you something. You have to be careful though when you look at all the data because, and I've seen this in real life. A lot of times, people get consumed with that data and they become what I call some of the digit people. In other words, all they is that data, but they never do a trade. A long time ago, 100 years ago, 75 years before Michael was born, I was a developer, and my competition had a guy that he did the best studies, the best everything he did from official packages. He never, the whole time I knew him when he was active for about 15 years, he never developed one single. But he had the best package to take to the bank or the money with. They never went to the bank. You know? I called him some of the digits. It was you just obsessed with that information.
Yeah. No, there is definitely analysis paralysis is very real.
Yeah. Absolutely.
We kind of encourage, sometimes you got to look for a reason to stay out of the trade. But that's for, you'll notice we say that to people that say, I am over trading. I am chasing stuff. I'm coming in late and I'm doing too much. Oftentimes late entries, if a move happens and then you catch the last cent and then it turns and you lose money, a lot of stuff like that is not actually because, I didn't know what was going on. The reason I'm very familiar with this territory, that's one of my main struggles in trading, is I see, well, there's this reason and this reason and this reason. It might not work out, I know what it's doing, but what if this and this happens? And it's pushing up and it's at 125 and then it's 125.10. You're like, well, it could stop a little bit after the resistance point and then 125.20. And you say, well, now it's too far. Now I might be chasing it in the 125.30. And you're like, well, now I'm definitely chasing it. But what about this reversal? And meanwhile, there's no trade. It doesn't matter.
It's
right.
Mike, it's exactly like a guy that can never make up his mind about dating a girl. Can never make it. So he ultimately becomes a priest because he can never make up his mind. Right?
There you go.
What happens, yeah.
So it's it's a fine balance for sure. And I think that's all it is the time frame you're trading in. It's relevant information to the time period you're trading. Fed decisions, we care about those. Mm-hmm. We care about Fed decisions because it affects us in our time frame.
All right.
Something like Randy's talking about, the producer price index, or whether the market's green or red for the day, is going to have a lot larger effect on something that you'd be in for 3 to 4 days or a week, like some of the covered call positions. If it's going to affect the next week, then it's relevant to you. And then there are bigger things that we don't really do much of because we don't hold stocks for 3 to 4 months. We don't, month swing stock positions, things like that. There's a lot of different option strategies that we don't do. And those longer term things may, some of this may be relevant to you that's not. So I would first establish your time frame within your trading, because so much of it has to do with the time frame you're trading in. Mm-hmm. That defines what's relevant and what's not. I encourage everyone to read this report though. It's very helpful, and it kind of alludes to what type of time frame. For instance, a reading that is stronger than forecasted is generally supportive for the USD, while a weaker forecast reading is generally negative for the USD. So obviously something like a price change on the US dollar is going to have more of a long-term effect, because while we've seen wild swings over time in the US dollar, it's still a pretty slow moving thing is currency in comparison to a lot of other things we deal with. So
and I may look at those longer term things as confirmation, as sort of secondary confirmation on a trade. But it's just we trade in such short intervals. Our time frame is so tight that it just seems that most of the information out there in the reports is not a direct effect on it, except for the Fed, which has an instant effect on it, which you were able to trade. But, you know, knowing which direction the overall market is going, I think it's important. What the overall bias is on your particular stock is very important to know. But the other things, in my experience, I haven't found to really affect my trading decisions. Maybe they should. You know, maybe I should pay more closer attention. But the nice, you know, and then again, just going back to the ice charts, and I know I'm pushing the ice charts today a lot, but they are the core of what we do. You know, they give us really all the information we need to make trading decisions.
And that's what you guys teach the people that subscribe to that service, is how to read those charts. Because I mean, it just makes it simple and easy. You learn how to read those charts.
Yeah. But I also think, you know, the more you know about economics, the market, how things move, what affects things, I think that's the smarter you are, the better.
Yeah, sure.
You know, as long as it's not creating obstacles in your trading. I think the more you know about how money works, why traders make decisions, you know, global geopolitical, I mean, all that stuff is really important.
Kim, there's so many good indicators. People will focus on just one or two. And then it does begin to affect them that way. They won't make a trade because this particular index is doing this. They don't do anything. That's the beauty of it at the moment. We don't care. All we know, we just want those damn things to make the market go down. That's all we want. We don't care how far it goes. We just want to go.
Yeah, and frankly, if it was more complicated than that, I'm not sure I could get it.
Yeah.
And I think that's a good summation. Is that, you know, at the end of the day, and I know there's a lot of algorithmic trading nowadays, but at the end of the day, whether it's an institution or a person, I think there's a lot of core truths in the granular. When you zoom in really close, you can see the core functions, and that is that there's someone on each side of every share that gets exchanged. Yep. It is a transaction that's weighted to one side or the other, and it happens billions of times a day.
Don't you have on our website a link for a free trial, a couple-week trial of our microphone trading? You still got it?
Let me just check. I'm not sure if they still have that instated or not.
While he's checking that, let me say again, you check out our master's class coming 24th and 25th of July. It's going to be in downtown Fort Worth at the Sheraton. 2 days. Yep. On Fridays, be cocktail party. Saturday, two seminars, 2 hours more, and 2 more time. Then we have a big dinner we pay for that night, Saturday night. And then Sunday, 2 in the morning, 2 in the afternoon. And tremendous. And Micah has all those links on the website. We can sign up for all that stuff.
Yep, absolutely.
Did you have the 2 free weeks? Micah, is it still on that?
What'd you say?
Did you still have the 2 free weeks for the microphone?
Yes, the 2 free weeks are still up. Yep. Yeah, absolutely. As well as on our TikTok, I have on the bottom. There's about, I mean, we're pushing like 70, 80 videos of individual trades that you can just see. See.
Yeah, Mike, I want you to be careful because recently there's been a couple people really getting in bad trouble on TikTok, and you need to be careful.
Really?
Oh yeah, bad. Yeah, one woman, one man. Yeah, I don't know what the hell they were doing. Maybe they take it when they should have been talking or something. I don't know.
Yeah, and by the way, the work and the videos that Mike is putting up on TikTok are just great examples of our technique because he is showing you our trades in real time. When they happen, has some commentary on it, just great stuff. And there's just a ton of them. I love them. They fit TikTok perfectly. It's just a great platform for what we do. So if you haven't and you want to check out what we do, go to TikTok.
Yeah. Great place for it.
Yeah, it's scrolling there on the bottom. Yep.
Yeah. But yes, and then I obviously can't reveal it totally, but the sale mentioned in the Masters Seminar email that you all got is going to end fairly soon. So take a look at the Masters email, consider it, watch some videos, and see how you think about it. But the price will be going up in a certain amount of time, just for everyone's benefit. I want to thank everyone for being here. If you learned anything, feel free to drop a like. That'd be awesome. On this video, it helps us out a lot. And just thanks for being here. Thanks for commenting, everyone who did. Good to see you, Marion and Jim, always. And then a friend. I just have so much curiosity every time you comment. It's just it's like something from a movie. A friend commenting. It's just
okay.
I like it. It's a little ominous, but I like it.
Thank you, Mike. I'm going to sign out now. See you later.
Sounds good. Thank you, everyone.
Bye bye.
All right. See you next Thursday.